Right, yeah. So this week, playing the game slightly differently. Now I'm waiting on a lot of my UK stocks to bring me some profit. So far, it's been okay, but don't forget we're in a bear market, and the bear market is very difficult to work with. So, on a normal market, bull market, I'm happy to take 7 to 10% to 12% plus return on investment. Okay, and in this case, because it's a bear market, I'm taking anything less than that. Anyway, let me get this up before it gets too late. Not less than that. I'm taking around 5%. So at the moment, this is just below 5% ROI. I'm going to sell it. I'll tell you why. Let me clear that first. Let me capture my little gain and then I'll tell you why. So since yesterday, a lot has changed. Well, actually last week. The reason being, look where it is now. This is 3-month high. Can you see? It's not worth me risking it. There seems to be a resistance on this line. I mean, it could go a little, further up a bit potentially, or even past that. But likelihood is that it may not. So it's not worth taking the risk. A year view, it's okay. Like I said, is I don't want to risk it for a biscuit. However, one thing I learned is that BP, Shell, even ENI and other fuel companies, they have a lot of these sharp movements, which is actually good for, swing trading. Now, these are my favorite stocks at the moment, Shell, BP, because I've managed to get overall 15% ROI, and it's only been 2 months, less than 2 months, and I've managed to get 15% ROI from them. So it's been really good in that sense, hence why they're my favorite. I'll probably plot and purchase when it goes down because I anticipate that to go down, which it probably will. So far, all of my calls and all of my actions and decision making has been on point, let's just say. And this is a good example of it. When I pulled out right now, it's a good call, I think, because I think it's going to go down because of the fact that it's close to the resistance line. Now, when it goes down, I'll see how much down it goes to, but I'll probably put trigger point to 5, price select to 10, and then I'll go with the flow basically. All right. So, yes, I was going to talk about something else. Right, because it's a bear market, I'm working this game differently at the moment, okay? And how I'm working this game is this. This is an example of a stock that was dead. It was minus 3% last week, and it kept going down to 5%. Now, I know it's a small share, but that's not the point. Point is about understanding the market. Don't forget, I'm actually playing with real money, which you shouldn't do. And again, I'm not a financial advisor, so, take your advice from somebody who's a qualified professional, whatever. This is my journey, and I'm just sharing my journey and documenting it. So what I did here is, because it's a bear market, it's going to keep going down. I figured out that the price, you see that my purchase average, which is average price here, that is at that price. I can bring that down closer to the flat line. Or another way to look at it is the return is minus 1.80. I want to bring that down. I want to bring that down to close to 0, or at least closer. So what I did was I purchased double the shares, as you can see here, 18 shares, from 18 to 16, and that negative return dropped drastically, almost by 1%. Almost, obviously not exactly, but almost by 1% it dropped by, right? And this is exciting. The reason why I did that, it's to enable that particular stock to go into profit potentially. Now I'll show you an example why. So what I did is, essentially, that then enabled the price to drop, as you saw, and then eventually it went into profit. I sold it, as you can see, I sold it at 336. 336.5. If you look at it, 336.3 was the negative. So 336.5 actually gave me a profit. Supposedly. Okay. Very small. It was pretty much breaking even. But I'm happy with that because I wanted to take a green victory for psychological reasons. Psychologically, I wanted to come out of it with a victory, knowing that I know what I'm doing. I'm learning that art, my tactics and strengths and strategies are working, and it's a proof in the pudding. This is a proof in the pudding. Now, this was an experimental stock I purchased. I brought the average down with an experiment as well, and eventually we done the job. Now, I purchased these stocks, like property stocks, initially as part of my original plan. Since 2-3 weeks ago now, my plan has changed. It's more about medium term swing trading, basically merging swing trading strategies with medium term investment strategies. So on that basis, these stocks are no good to me. So I'm looking to clear the property stocks. Now, the reason why I sold it here, for a good month, the stock struggled to go beyond this point here. And because of its resistance being built here on this point, I felt that considering that we are in bear market, I'm better off selling it here, taking a little victory, because I don't want to hold it for long. I don't want to hold it for a few months. If I have to hold it for a few months, that's fine. I'll hold it. But considering the fact that we're in a bear market and also a massive recession is about almost 90, 95, 99% likely to happen in America, I'm actually I also sold war paint on profit. So that's another one that I was keen on waiting. I sold it actually here, just below it dipped. So again, some good decision making. It's really important that you have to make, your decisions got to be as based on predictions and anticipations. So what I'm doing now is I'm actually collecting the money out of my stock into my essentially trading account, leaving it there parked. The reason I'm leaving it parked, as I anticipate the stock market to take a massive nosedive, it already has in certain sectors. When it takes a huge nosedive, I will look to capitalize. I will look to bank on that and buy shares like mad. But if my money is tied into stocks at the moment, then that opportunity won't be available as much. And that's one thing I want to do, is capitalize on the market going down in the bear market, which usually a recession follows a bear market. So that's what's happening now. Clearly, as you can see, overall negative. Granted, these are American stocks, the market hasn't opened yet, but the point is, it's about planning and preparing for that vision. Having said that, there are certain stocks I will purchase and buy and trade with and in, as I'm doing so, like this. I just purchased it earlier today because it went down by 7% or something like that. Yeah, six something. It was all the way down here when I purchased it. Now this is one of the top, almost like a blue chip company. If you look at 1 month, it's 1 month down. 3 months, it's all the way down on 3 months previous trading history. 1 year, it's okay. There is some sort of flaws, not when I say flaw, support there, as you can see from here to there. And I could go down further, don't get me wrong. It's possible for it to go further, which is fine. If it does, I'll purchase more. But at the moment, it's going up. So the way I'm looking at it is this: it's possible for it to go rebound from here, which it does that often, you rebound at least 5-7%. Now, if I can get 5-7%, I'll take it, because remember I said is that this is a bear market. You can't really, you can't expect more than 5-7% ROI in a bear market. But if I can get bear market 5-7% from this stock now, then history tells me that it will dip again at some point. And if it does that, I'll buy again. So I'll capitalize on that. So then, and also, if it doesn't work out for long term, let's just say for 2-3 months, it's still down, that's fine. If it goes down more, I'll buy more shares. The reason being is because I want to bring the average down. In this case, I'm below the current price, so I'm making profit. But let's just say this line, the current price was below my average, and if it was down by quite a bit, I'll buy shares just to bring the average down to the current low price, which means when it goes up, I make profit. And also another thing is that it's easier for it to go up closer to its current price than where it is now. Just to demonstrate what I just said, let's just take Shopify. Okay, nearly 10% down on Shopify, right? Which is a massive drop. And I've invested quite well, reasonably in that stock. So let's have a look at my 3 months trading. The graph. So the 3 months graph will show you that this is where my price is now. I thought it was a good buy there, but since then the market has been dropping a lot more, and obviously it's down here, the current market. So the theory is, if I purchase at this price, I'm likely to bring my average price, which is $60.73, down to somewhere here. That's the aim. It depends how many shares I buy. If I buy 5 shares, it's likely to drop to 58. Likely. I haven't done the maths yet, but it's likely to drop to that. And then if I buy another 5, it'll drop further. However, what I'm doing now is that where my position is overall, I'm okay. I feel not threatened. I don't feel threatened. I feel safe. I will probably buy a share or two today when the market opens, if it remains at this drop. But if it drops further, I'll buy more shares. So I'm actually waiting to see where the market is going. If it drops significantly down, we already is significantly down, I will see if it's worth purchasing. Well, it will be worth purchasing, because this is a growth stock, and it's growth stocks are good for quick return, if you like, within a couple of days, months, weeks. And I've made profit on this stock previously anyway, so I'm not too bothered. It's got a good market cap, beta rating is okayish, but it's a growth stock, you expect that. And so that's the strategy I'm implementing at the moment. So far so good. It is a bit like chasing it's a bit like going down the rabbit hole and to see how deep that hole is. But the thing is, the way I'm doing it, I'm being very measured. Like, for example, Sony has dropped quite a bit now but this is obviously pre-market trading figures. They don't really matter much, because it could all change when we start trading. The point is, when we start trading, if that remains at this price, I'll purchase more. And I don't mind parking my money and risking it, risking a lot of my money into this particular stock, purely because it's got a good overall growth trajectory. The dip is nothing abnormal. It's everybody's, the whole market's down on its knees. It's a bear market, so you expect that. And to bring it down, it's actually quite nice, because then the return will be lovely. The return will make up massively. So overall, as you can see, it's nothing worrying. It's not worrying me. It's a safe stock. Sony is a blue chip company. Okay, I might not get my money back within a week or two, maybe even a month or two, but if I can afford to hold for a year or so, no problem. And I think if I was to bring that average down to this current price, it will definitely increase my profit margin drastically, and it will make up for all the losses and the time that I've waited. I mean, we're talking about 20-30% gain, so it's not, yeah, it's worth the wait. So this is where I am now in terms of strategy, game plan. So I'm just watching the space and see what moves I need to make. Bear market, you really need to keep an eye on the stocks, and make your moves within minutes to seconds. So I give a quick update of my stock, where it is. Yep, I'm in negative, as you can see, quite a bit. However, overall I have made profit. So I've made nearly £500 profit overall without any dividend payout, just from Thingamajig. So that's fine, no problem at all. I'm happy with that. If you compare that to this, yeah, I mean overall negative. But the point is, as soon as the market opens, all these figures could change quite quickly. And I anticipate, well, they could go down, to be honest with you, but that's fine. I'm cool with that, because what I will do then, I'll purchase more, and I'll look to bank on that and sit on it. And as soon as I sit on it, as soon as the market turns, goes into the bull market, I should be able to make a nice lot of return on this overall.